Hey everybody, Smart Silver Stacker here. Hope you're doing well. The US dollar is trading at a critical support level that dates back over a decade, just as the Federal Reserve begins cutting rates. If that support breaks, we could be looking at a once-in-a-generation move in the currency markets, and gold and silver are already front-running it. Today we'll examine the charts, the policy shifts, and the macro picture behind this moment, and why I believe this is the dollar's last stand. On September 17th, the Federal Reserve cut rates for the first time in this cycle. But this isn't just another rate cut. This is happening with a $37.5 trillion national debt load, record interest costs on that debt, and a deficit that just hit $345 billion in a single month. We've also got a new player on the scene, Stephen Miran, assuming his new role as a Fed governor the very day of the recent cut. Miran's dot on the Fed's dot plot is a major outlier. He's calling for a very dovish 5 cuts in 2025. Miran also happens to be President Trump's chief economic advisor, a role which he has taken a leave of absence from to serve as Trump's Fed governor appointee. Trump has made it clear that he believes that rates should be up to 300 basis points lower than the 425 to 450 point range that persisted prior to Wednesday's 25 basis point cut. In an interview following the FOMC decision, Miran made it clear that he plans to attempt to persuade the other governors of the Federal Reserve Board to his dovish stance, and you can already see the trajectory of policy moving forward, much looser and much faster. This pivot comes at a critical moment for the US dollar. The US dollar index, DXY, is sitting right at a trend line of critical support that dates back over a decade. Break through that, and the new floor could be significantly lower. At the same time, the M2 money supply is back at record highs after a brief decline during the Fed's short-lived tightening. That is the monetary backdrop against which this rate cut cycle is beginning. Many more dollars chasing the same goods and services. Gold and silver are the early warning system of the financial markets, and right now, they are already sounding the alarm. The gold price closed up about $40 just this past Friday. After a huge run, the gold price is consolidating. It's forming what looks like a bullish continuation pattern and preparing for another move higher. Silver closed up more than 3% on Friday at a new 14-year record high above $43 per ounce. And when you zoom out, you see something even more powerful, a multi-decade cup and handle pattern that suggests a major breakout is already underway. And despite the strength that the metals have shown of late, one clue that this bull market has a long way to run, the gold to silver ratio. Even after all of these moves, it's still around 85, near the very high end of the historical range. We would expect this ratio to collapse during a blow-off top in a precious metals bull market, and current levels do not reflect that in the slightest. And it's not just the metals, the miners are confirming the move as well. The GDX Senior Gold Miner ETF recently broke out above its previous all-time high that dates back to the 2011 precious metals bull market, then retested that level in a bit of a buy the rumor, sell the fact type event where there was some short-lived profit taking in the wake of the FOMC rate cut decision. And then on Friday, the GDX surged more than 5% to fresh record all-time highs above $72. Historically, miners leading the metals has been a confirmation of the big bull markets, and that is exactly what we are seeing now. The underlying issue is simple. The US government can't afford high rates anymore. Interest payments are going parabolic, over $1.1 trillion annualized now. The deficit in August alone was $345 billion. Something has to give. Lowering the rates of interest on the debt is one option to avoid a catastrophic debt spiral. In fact, this is one of the reasons that Trump has stated he wants significantly lower rates so the U.S. national debt can be refinanced more affordably. The problem is cutting rates alone may not be sufficient to bring down rates on U.S. treasuries. In fact, Following the rate cut decision on Wednesday, U.S. long-term treasuries have come under pressure and rates have been rising. Why? Well, one possible reason for this that stands out is increased inflation fears among investors in U.S. debt. Knowing that the dollars they are to be paid back in will be devalued, they demand higher rates. And if cutting the federal funds rate alone doesn't bring yields down, the Fed's only remaining tool is QE, or quantitative easing, direct purchases of treasuries with newly created money. That is highly inflationary, and it's rocket fuel for the precious metals. With all of these macro forces converging, the Fed turning dovish, the dollar under pressure, and the metals breaking out, it's worth looking at examples of companies positioned to benefit from these trends. One US-based gold and copper developer that fits this description is the sponsor of today's video, US GoldMining Inc., ticker USGO. Just mere days ago, on September 17, 2025, the U.S. Federal Reserve announced a new rate cut. Powell's term as chairman of the Board of Governors of the Federal Reserve expires in May 2026. Trump has already named his short list of advocates that he believes will promote economic growth, and the Treasury Secretary has just stated that the Fed will soon undergo a full review of its gain-of-function experimental monetary operations, including QE, climate, and many other ideas that it took on in recent years. Today, as history is unfolding right in front of our very eyes with rate cuts, with China and Russia's gold development, I will show you a gold copper company which owns a project with a resource estimate on American soil and is trading around its 2023 IPO price, with a relatively tight share structure of only 12.7 million shares issued and outstanding. Most importantly, this NASDAQ-listed company is a U.S. gold-copper development opportunity from start to finish. Check this out. Wall Street's Goldman Sachs just issued a comprehensive report that long gold is a high conviction trade, and history was made when gold finally took out its 1980 inflation-adjusted record high in US dollar terms. For the first time since Goldman Sachs began questioning and surveying, gold is the #1 trade. Russia and China have been actively building independent gold markets. China has opened its first offshore gold vault in Hong Kong, enabling trade partners with positive yuan balances to convert directly into gold via the Shanghai Gold Exchange, bypassing the US dollar. These immense global structural changes have sent gold soaring, as well as many gold stocks. The GDX index is up 113% in 2025 so far. This is the biggest gold stocks ETF in the world, and this is in comparison to the QQQ, which is up 17%. My point is that the gold sector has been massively outperforming the tech sector, and that means that with the recent rate cut and a 79% probability of another rate cut in October and a 91% probability of a third consecutive one in December, according to the FedWatch tool, this could be the first gold stocks bull market in 20 years. For this new bull market, I am profiling my consequential gold copper exploration and development opportunity on U.S. soil, the sponsor of today's video, US GoldMining Inc., ticker USGO on the NASDAQ. The last major rally into all-time highs for gold, silver, and gold stocks occurred between 2009 and 2011, well before this new generation of investors were even of age. The tailwinds from Washington are exactly the opposite of what they were in the past 30 years. They're productive and constructive towards mining and positively contributing toward the overall rally in mining stocks. I think you should take a look at US gold mining trading on the NASDAQ with the symbol USGO. Alaska has been important for Trump's administration. The governor of Alaska has visited US gold mining's project and its estimated mineral resource. Whistler is the closest large undeveloped gold-copper exploration project to the main population center of Anchorage. Trump also issued an executive order on day one of his presidency called Unleashing Alaska's Extraordinary Resource Potential. on day one. The administration then issued a second executive order called Immediate Measures to Increase American Mineral Production. The executive order directs government agencies to immediate action to facilitate domestic mineral production to the maximum extent possible, including copper and gold. In addition to federal support at the state level couldn't be stronger. Alaska Governor Mike Dunleavy is a strong proponent of economic growth and the infrastructure to support mining in his state, and he has personally visited the U.S. gold mining project himself. Along with support from the governor, the project has been visited by U.S. Senator Lisa Murkowski. In April 2023, U.S. GoldMining went public with the symbol USGO on the NASDAQ for $10 a share. The gold price then was just below $2,000 per ounce. Today, gold price has climbed above $3,500 per ounce, and the stock is currently trading at or below IPO levels. The Whistler Project mineral resource estimate comprises 294 million tons at 0.68 grams per ton gold equivalent for 6.48 million ounces gold equivalent indicated, plus 198 million tons at 0.65 grams per ton gold equivalent for 4.16 million ounces gold equivalent inferred. You should review U.S. GoldMining's latest annual report on Form 10-K and the technical report summary incorporated in it for information on the project and the mineral resource estimate. Right now, U.S. GoldMining share price is trading at or below April 2023, when it was spun off and went public. While other factors can impact stock performance, I think this supports a further look. Here's where this gets interesting in my view. The company's ownership structure is quite unique. Take a look. 78% of the outstanding shares are held by the parent company. One shareholder controls 78% of the shares. Another 4.5% is held by management and insiders. Over 80% of the shares are tightly held. This is exactly what I love to see. A pivotal catalyst is now underway, which is why, between the following aspects of this opportunity, I am telling you about U.S. GoldMining, symbol USGO on the NASDAQ. A historic Fed rate cut cycle has commenced. Gold's all-time high. Trump's administration has issued 2 executive orders on Alaska, and the state is moving forward with a road system to connect the Whistler Project with Anchorage, trading below its April 2023 level when these other tailwinds weren't in place. And now the company's most important moment since inception has arrived. U.S. GoldMining has begun the process of an initial economic assessment, also known as a PEA, which stands for Preliminary Economic Assessment. This study is a preliminary review of economic factors, and the timing couldn't be any better, with gold above $3,600 and copper at $4.50 per pound. Do your own extensive research on U.S. GoldMining, symbol USGO on the NASDAQ. My personal favorite Alaska play. Make sure you review U.S. GoldMining's annual report and other filings with the SEC when you research this opportunity. As always, do your own research. We are in a very different environment than we have seen in decades, and it's creating both risks and opportunities. If you want to stay on top of this trend, hit subscribe and let me know in the comments if you think the dollar support will hold or if this really is the dollar's last stand. Thanks for watching, everybody. Stay safe and happy stacking, and I'll catch you next time. Smart Silver Stacker, out.